But just momentarily, let's shift away from buy now, sell now, talk about some corporate earnings. And of course, do stay on. We will be getting on board some viewer queries as well. But yeah, Mercator is a stock that's on in our radar. That's after the company delivered its Q4 numbers, which did see a decline come by across the key parameters. Not only that, the losses as well did expand quite a bit in the quarter gone by rather. So let's introduce and bring on board Mr. Shalabh Mittal, the CEO of Mercator, to explain what exactly happened in the quarter gone by. Mr. Mittal, good morning. Thanks so much for joining us on ET Now. If you had to talk about the numbers, it does look like you had quite a challenging year, almost all business segments. Tell us about what are the factors that affected FY18 and also the outlook for the year ahead, because from what I understand, you've given quite a good outlook, quite a good guidance in terms of margins as well as revenues for the next 2 years.
Yeah, good morning. So FY18, yes, was a difficult year for us. We had, a big coal disruption in our coal business, which affected close to 4 to 5 months of revenue and profits at the time when the coal prices were high. And also, we had lost one of our dredging contracts, which the new contracts, while we are bidding, could not come on track in the last financial year. In terms of losses, we also sold 3 of our ships, out of which 2 of them were sold on losses, at loss. So that contributed to the loss. Having said that, if you look, you mentioned about the guidance and the projections. We're extremely positive about going forward into next year and March 20. The big trigger, of course, would be the oil business, which contributed nothing to top line and bottom line in March 18. And would become a significant contributor both in the next year, and the full impact will be seen in March 20. We are seeing expecting close to more than 120% in jump in EBITDA levels from now and March 20. The triggers would be as I said, the oil business, as well as we plan to ramp up our coal production with a higher percentage of high quality coal, which will then increase both the revenues and the profit margins.
About your oil and gas business, you're expecting the mining lease approval to come by next month, having received FTP for 2 fields. Could you tell us by when will commercial production begin and what's your target for this year as well as the next year?
Yeah, so mining license is expected to come by within June, and post which we can start the production. The way it would happen is the production will start and the ramp up will happen by the end of the calendar year. So we expect to have the ramp up, say, by November, December. So post the ramp up, we expect to have production in the range of 5,000 to 5,500 barrels a day, which of course at the current price is extremely profitable for us. And these being onshore blocks, the cost of production is very, very low. The full impact of oil, considering the ramp up will happen only by November, December, will be seen in March 20, where we will have the full year of the oil production and the revenue and profits coming in.
You see the oil and gas business contribute, like you said, the full impact will only come in March 20. How do you see it shape up, say, like over the next 3 years? Any contribution, you're targeting from the oil and gas business, say, by 2021?
Yeah, so I think in terms of our projected EBITDA for March 20, it's in the range of 600 to 650 crores. And we expect oil to contribute about 35% of that.
So after the disruption to coal mining operations in Indonesia in the second quarter, there's been a good recovery. How do things stand at the current juncture, and our investment plans here over? What are the investment plans over the next couple of years for that operations?
Yeah, coal has, the team has done a marvelous job there. So, the disruption happened between November. We started the production in February. And by April, actually, we've seen absolutely normal production levels, which we had pre-disruption. In fact, May would be even higher. So the run rate is in fact better than the average of 2017, which was, full year of production. So good run rate of production. So in terms of the plan going forward, the coal mine, as I mentioned, we plan to increase our production in next year, which will again be March 20, from a current say 1.8 to 2 million tons to 2.5 million tons annually. And also we are investing in a way that we increase the proportion of a high quality coal, which has a significantly higher margin. So overall, the margins of the coal business will also improve by the end of this year, and the full impact again will be seen in the next financial year, which is March 20.
Okay, so it looks like, you know, you have big plans coming in from oil and gas and coal segments. I think you're looking at increasing the contribution coming in from these two segments. So how will the overall group strategy shape up, you know? And also you've guided for about, I think, 1,450 to 1,550 crore of top line, 35 to 40% of EBITDA margins for FY20. What's the roadmap to essentially achieve these targets?
So the big contributor, as I said, will be coal and oil. I think we're very clear. Oil is on the brink of start of production. The ramp up will happen. We'll continue to drill more wells, and you know, there could very well be an upside in the oil reserves there as well. But even if we stick to the plan of action, we should be able to achieve those numbers. Similarly, in coal, we will focus on increasing the production as well as increasing the margins. Now, other businesses being shipping and dredging. Dredging, we do have a fairly robust pipeline of the bidding pipeline. So where we would be bidding, and we expect to get a fair bit of those orders. We are looking to diversify geographically in dredging as well, looking at other Asian countries. And the growth of business around dredging seems to be pretty significant because of the government's focus on inland waterways and the marine infrastructure. Shipping will continue to be the way, you know, on the current numbers. We do expect the rates to go up. You know, generally, I think overall sentiments around shipping is that 2018 should be the last year of the low freight rates, and then we should see the freight rates going up. That's because of demand supply sort of evening out, where the scrapping of ships is accelerated this year, and the new deliveries actually fall off. So we should see a stable income from shipping, growing income from dredging, and a much larger income from oil and coal in the coming years.
All the very best for all the targets that you've set for yourself, and on that note, we'll let you go.